Welcome everyone. Today we're diving deep into the world of monthly dividend stocks, specifically focusing on four of them: O, STAG, Main, and ARR. Now you might be wondering, what exactly are dividend stocks? Well, when you purchase a dividend stock, you're buying a share of a company that pays out a portion of its earnings to its shareholders. That's you. These payments are known as dividends. Why are these beneficial for investors, you ask? For starters, they provide a steady stream of income, which is especially advantageous during uncertain market conditions. Plus, they're a great way to reinvest and grow your portfolio. But the icing on the cake? Regular dividends. It's like clockwork income, month after month. Picture this, a financial tree that bears fruit every month, and all you have to do is plant the seed. Intriguing, isn't it? Stay tuned as we delve into the specifics of these four exciting dividend stocks. Thanks for tuning in, viewers. If you're finding this content valuable, there's so much more to come, filled with even more amazing tips, tricks, and inspiration. Make sure you hit that subscribe button to stay connected with us and never miss out. And while you're at it, drop a comment below and share this video with your friends. First off, we have O, also known as Realty Income Corp, a company that has been paying dividends to its investors for over 50 years. Realty Income Corp is a real estate company that primarily focuses on freestanding, single-tenant commercial properties in the United States and Puerto Rico. It's a part of the S&P 500 and trades under the ticker O on the New York Stock Exchange. Now, what makes Realty Income Corp stand out is its long-standing history of reliable dividend payments. Since its inception in 1969, Realty Income Corp has been committed to providing its investors with monthly dividend payments. In fact, it's fondly referred to as the monthly dividend company, proving its reliability in providing consistent returns to its shareholders. As of now, it boasts of an impressive streak of over 600 consecutive monthly dividend payments. Not only has Realty Income Corp been consistent in paying dividends, but it's also shown a steady growth in its dividends over the years. This is a result of its focus on long-term inflation-protected leases, which provide a reliable source of revenue. Let's talk about the future potential of Realty Income Corp. The company's strategy is to invest in high-quality real estate leased to commercial tenants in industries resistant to economic downturns. This strategy, combined with its commitment to maintaining a conservative capital structure, positions Realty Income Corp for continued growth in the future. In terms of financial performance, Realty Income Corp has showcased a solid track record. It has managed to deliver positive earnings over the past decade, despite the ups and downs of the real estate market. This demonstrates the company's resilience and its ability to navigate through challenging market conditions. To sum it up, Realty Income Corp, with its consistent dividend payments and potential for future growth, presents a compelling case for investors seeking steady income and long-term capital appreciation. It's a testament to the company's robust business model and its commitment to shareholder value. Realty Income Corp, with its consistent dividend payments, is certainly a stock to consider. Next, we have STAG Industrial, a real estate company that focuses primarily on single-tenant industrial properties. Founded in 2011, STAG Industrial has built an impressive portfolio of over 450 properties across the United States. The company's unique approach of focusing on single-tenant industrial properties has allowed it to carve out a niche for itself in the real estate sector. STAG's performance over the past decade has been commendable. The company has consistently delivered solid returns to its investors. In the last 5 years alone, STAG's shares have yielded an average annual return of approximately 8%. This steady growth trajectory has been driven by the company's robust real estate portfolio and its strategic focus on high-growth markets. Now, let's talk dividends. STAG Industrial has a strong track record of paying dividends. The company's current annual dividend yield stands at close to 4.5%, which is notably higher than the average yield of the S&P 500. This makes STAG a compelling choice for income-focused investors, especially those who prefer monthly dividend payouts. But what about future growth prospects? Well, the outlook appears promising. With the rise of e-commerce and increased demand for warehouse and distribution centers, the industrial real estate market is poised for growth. As a player specialized in this sector, STAG is well positioned to capitalize on these trends. The company's focus on long-term leases also provides a certain level of predictability when it comes to future earnings. In addition to this, STAG's commitment to sustainability is worth noting. The company has made significant strides in reducing its environmental footprint and is actively working towards achieving its sustainability goals. This conscious effort towards sustainability not only benefits the environment but also adds to the company's long-term value proposition. STAG's focus on a specific niche makes it an interesting choice for those looking for a more specialized investment. With its strong performance, consistent dividend payouts, and promising growth prospects, STAG Industrial certainly deserves a spot on your watch list. Moving on, we have Main Street Capital, a principal investment firm that primarily provides long-term debt and equity capital to lower middle-market companies. This Houston-based firm is a heavyweight in the business development company sector, operating since 2007. Let's delve into the performance of Main Street Capital. The company's approach has been consistently strategic, focusing on companies with strong management teams and sustainable competitive advantages. This strategy has proven effective, with the company demonstrating a steady increase in net investment income over the years. This consistent performance has made it a reliable choice for investors seeking stability in their portfolio. Now let's talk about the impressive dividend yield of Main. It boasts an attractive yield that has consistently outpaced the average of the S&P 500. It's one of the few companies that pays out dividends monthly, which can be particularly appealing for investors who are looking for regular income. This high yield, combined with the company's strong performance, makes Main a desirable choice for dividend investors. But what about the future? Is there potential for growth? Absolutely. Main Street Capital's investment approach is poised to take advantage of growth in the lower middle market sector. This sector is often overlooked by larger investment firms, providing Main with a wealth of opportunities. Additionally, the company's diversified portfolio reduces risk and positions it well for future growth. In conclusion, Main Street Capital stands out with its robust performance, high dividend yield, and potential for future growth. It's a company that has not only stood the test of time, but has also proven its ability to deliver consistent returns to its investors. With a high dividend yield, Main is a great pick for those seeking regular income. Lastly, we have ARMOUR Residential REIT, a company that invests in and manages a leveraged portfolio of residential mortgage-backed securities. This mouthful of a description essentially means that ARR is a real estate investment trust that makes money by investing in residential mortgages. Now, let's talk about ARR's performance. The company has seen some significant ups and downs over the past few years, which is not uncommon for REITs. In fact, this volatility can often be a sign of a more aggressive investment strategy. Despite these fluctuations, ARR has managed to maintain a consistent and high dividend yield, which is a key metric for income-focused investors. Speaking of dividend yield, let's dive into that a bit more. ARR's dividend yield has been impressively high, often exceeding 10%. This is quite remarkable when you consider that the average yield for the S&P 500 is just around 2%. This high yield can be highly attractive to those investors who are after a steady stream of income. Now, let's consider ARR's potential for future growth. The company's investment strategy is centered around residential mortgages, an area that has seen steady growth over the past few years. With the current low interest rate environment, this trend is likely to continue. Furthermore, ARR's management has shown a strategic approach to risk management, which could bode well for the company's future performance. However, it's important to note that like any investment, ARR comes with its own set of risks. The company's high leverage means it's more exposed to changes in interest rates and economic conditions. Furthermore, its focus on residential mortgages means it's highly dependent on the health of the housing market. While ARR does come with its set of risks, its high dividend yield can be quite tempting for certain investors. It's an option worth considering for those who are willing to take on a bit more risk in exchange for the potential for higher returns. Remember, investing is all about balancing risk and reward, and what works for one investor might not work for another. So, do your homework, make informed decisions, and happy investing. Let's recap what we've learned so far about these 4 monthly dividend stocks. We've taken a deep dive into the world of Realty Income Corp, STAG Industrial, Main Street Capital, and ARMOUR Residential REIT, each offering unique opportunities for investors. Realty Income Corp, affectionately known as O, is a real estate investment trust that deals in commercial properties. Its strength lies in its diverse portfolio of over 6,000 properties spread across 49 states. With a history of over 6 decades, O has consistently paid dividends, making it a reliable choice for those seeking monthly income. Next, we examine STAG Industrial, a company that focuses on single-tenant industrial properties. Its appeal lies in its robust business model and its focus on e-commerce resistant industries. With a solid dividend yield, STAG offers an attractive investment opportunity, especially considering the rise in e-commerce and the need for industrial properties. Then we delved into Main Street Capital, a business development company that provides long-term debt and equity capital to lower middle-market companies. Main's high yield, combined with its consistent dividend increases, makes it a compelling option for income-focused investors. Moreover, its investment strategy of supporting small to medium enterprises positions it for potential growth in the future. Finally, we looked at ARMOUR Residential REIT, a company that invests in residential mortgage-backed securities. Despite the risks associated with the mortgage industry, ARR's management has navigated these challenges successfully, providing a high yield to its investors. However, one must tread carefully due to the inherent volatility of the mortgage market. While each of these stocks offers monthly dividends, it's crucial to remember the importance of diversification in any investment portfolio. Spreading investments across different sectors and asset classes can help mitigate risk and increase the potential for returns. Moreover, it's important to understand that investing in stocks, while potentially lucrative, does come with its share of risks. The performance of these stocks is tied to the health of the broader economy and the specific industries they operate in. Hence, careful analysis and understanding of these factors are paramount before making any investment decisions. Remember, investing in dividend stocks can be a great way to generate regular income, but it's important to do your own research and consider your financial situation and risk tolerance before making any investment decisions. The 4 stocks we discussed today are just a starting point. There are numerous other monthly dividend stocks out there, each with its own set of strengths and weaknesses. In conclusion, investing in monthly dividend stocks can be a powerful strategy for generating consistent income. But like any investment, it requires careful consideration, research, and a well-diversified portfolio. So, whether you're a seasoned investor or just starting out, these 4 stocks offer a compelling starting point for your journey into the world of monthly dividend stocks. Remember, investing in dividend stocks can be a great way to generate regular income, but it's important to do your own research and consider your financial situation and risk tolerance before making any investment decisions. We hope that this analysis has provided you with valuable insights into these 4 monthly dividend stocks. As we navigate the world of finance, it's vital to stay informed and up to date. Our channel is dedicated to bringing you the latest and most relevant investment-related content, helping you make informed decisions. If you found this video helpful, show your support by hitting the like button. This small action can make a big difference, helping us reach more individuals who could benefit from our content. Sharing is another way to extend the value we are offering. If you know someone who might find this information useful, don't hesitate to share this video with them. Most importantly, don't forget to subscribe. This will ensure you never miss out on our latest content. Your subscription is a vote of confidence, encouraging us to continue delivering high-quality investment insights. Thank you for watching. Remember to subscribe, like, and share. Stay tuned for more exciting content.